Hello everyone, happy Sunday. Simon here again with AvaTrade, and I'm happy we're having another one of our weekly trading plans. And let's begin. Again, I welcome our returning listeners and visitors, and of course, I welcome new people that are coming in. And for those of you who are new to this, I'll just spend a few words and explain what's the purpose of it. And before we go there, I just want to make sure that I read the risk warning disclosure. So here it goes. Any capital markets and trading information disclosed in this webinar is provided for informative purpose only and should not be construed or applied as investment advice, recommendation, or suggestion. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 71% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work or whether you can afford to take the high risk of losing your money. And you can find the full disclosure statement at avatrade.com if you'd like to. And here are the contacts. You can contact us, of course, on Twitter at AvaTrade. And you have a huge source of information recorded and posted for your information. You have tutorials, you have fundamental analysis videos, technical analysis videos, and many, many more. So you're welcome to visit our YouTube channel as well. And agenda of today, we'll go through indices, some Forex pairs, commodities, some stocks. And before I go further, I just want to switch, so I won't forget. I'll switch to the MT4 platform. We'll be using this to go through the instruments. And like I said, for the new visitors, I'd like to explain the importance of what we're doing here and how this idea came out. One of the webinars that I give, some people said, how about homework? Because I was talking about doing the homework, how important it is. So we tried and it's been very successful, and I'm happy that I do these weekly webinars. And the idea is really to give the traders some structure, some direction, some frame of actions, you can say. So basically, what we do is something that I've been doing for many, many years. We would taking a look what in general is happening fundamentally in the world and in the market specifically. And we're looking also at some economic events from the economic calendar. And then we try to also what I personally do, I go through the list of instruments and I point out certain things that have potential good trade scenarios for the upcoming week. And then we set up certain levels and we will see what could be the possibility for the upcoming week, and that gives the structure. And I always say that, I'll say it again, you plan your trade and then you trade your plan, and it really helps. And for those of you that are using it, I know that it helps you. And for people that are coming into the structure, I hope it works for you. And the bottom line, my goal here is really to leave you with some practical ideas with direction and a little bit of outlook in general, what's happening on the market and on the specific instruments. And of course, like we said, it's not a recommendation or anything. It's just something that we give. And of course, you need to use your judgment. You need to use your risk management and everything else to make sure that you trade responsibly and then you trade with caution and with risk management. That is very, very important. So there are few articles in general. Before we go there, just in general, what's the mood on the market? And uh, we are still in the earnings seasons, and there's some mixed earnings coming out. And also, the big issue is continuing to be the supply chain issues. And those are the thousands of containers that are not being unloaded. The ports are being uh, really backlogged. And it's a lot of issue. A lot of retailers are still worried about Christmas time, if the merchandise is coming on time and so on. And of course, that creates a lot of issues in the car industry and any industry, electronics, computer industry, chip shortage, everything else. It's all global economy, and it's amazing how we see how things are really, really connected. So it is affected pretty much everyone in business, especially retailers and technology and so on. So that's still continuing. And of course, we'll be following up on any updates on that. As I mentioned last week, Biden is trying to meet and push things through, and some other companies are trying to find the ways of dealing with this. So that's still remaining to be an issue. So let's take a look before we go into any specific instruments. I just want to share with you what's happening. And again, I encourage all of you to look at an economic calendar. You can just Google economic calendar. A lot of websites offer it. We have it also on our web trader on the app. You can start it from there if you'd like. So a few things that is waiting in upcoming week. Monday, I don't see anything super special. On Tuesday, we have new home sales changes, Richmond Fed Manufacturing Index. Those are important news, but not super important again. Then on Wednesday, we have something that to pay attention. We have the Consumer Price Index from Australia. We'll be watching that in the inflationary numbers. We have durable goods orders from US. That is important. And we have Canada, something to do with interest rate. We have the interest rate decision and monetary policy report and the press conference right after. So that's on Canada, and it's on Wednesday. Thursday, the same thing is happening in Japan, monetary policy statement, interest rate decision, and press conference. So that's on Thursday. We have ECB, European Central Bank interest rate decision, monetary policy, and that's happening on Thursday as well. So on Thursday, we have interest rate decision from Japan and European Union, both. Then we have also very, very important number. That is the gross domestic product, the GDP numbers from the US. And that's also on Thursday. And Friday, retail sales from Australia and GDP numbers from Germany, which is very, very important. And European GDP coming out as well, together with the CPI numbers. So Thursday and Friday will be very busy as far as Europe announcements. And that's all pretty much. So we have interest rate decision from Japan, Canada, European Union, and press conferences and so on. So a very important announcement this week. So we'll be watching. Of course, that's is going to affect the currencies. Of course, it's going to be Euro, Australian dollar, Japanese yen, and Canadian dollar, as well as Canada is coming out with decision as well. So we'll be watching those instruments together with others. So let's go. Let's try to go into specific instruments now and see what could potentially be happening in the coming week. We'll start with crude oil. Crude oil has been super strong with a few tails. We're still open. We still closed the week on the high. And like we mentioned a few times, some analysts predicting oil going to 100 till the end of the year. And as of now, as the moment we clear the 76, 77 area, we've been going strongly higher. And there's not really pullbacks happening in the weekly. This was after big move, we had a little bit of stagnation here for 1 week, and then 1, 2, 3, 4, 5, 6, 7 weeks straight up. and we close on the high. So that's a very bullish sign. We'll be watching this week for possible continuation. And for those of you that are trading oil, that or any instrument for that matter, if there's a strong move higher, there's always a temptation to short it, which it's in some cases not a bad idea, but a lot of you or a lot of us would try to do it ahead of time before the trend turns around and we're being stopped out or just close with the losses. So in this case, the trend is going higher. One of the things that we could do or look into it is to look for some pullbacks for possible continuation in the direction of the trend. So that's an oil. And we'll take a look, of course, at Chevron, which has been strong together with the oil prices, and ExxonMobil as well. And if we're already talking energy, let's take a look at natural gas. Natural gas, after this crazy move up, it's been taking some profits here. And take a look what happens last week. Last week we really was sold out where we had the strong recovery. This is a very bullish sign over here. We went from 530 to 483, and then we closed about the same price we opened the week. On the daily chart, you will see it. Basically, what happened, it was a gap down and continuation. We found some support at around 497 the first day. Then we moved the following day, retested supports lower. We found about support around 482, and we closed higher. And since then, we went higher. The scenario could be the following: we could be closing this recent gap over here, and this is the gap right here. I'm going to mark it with the level. The gap of last week, the previous week, Friday. So the low here was 539.9. So let's say 540. If we choose to go higher and we break 533, 540 would be the next thing to watch. And from there, it could be different scenarios. It could be that distribution happened and some profit taking took place and we can continue higher, or we'll find difficulties breaking these levels and that would cause the instrument to slide lower and retest again, let's say between 480 and 5, and that would be this scenario. So we'll be pretty much watching the 533, the week's high, to be broken to the upside, and then we'll see what happens there. Copper. We spoke about copper. We said that it could be moved down on the China issues and in general issues as far as demand, and it was working very nice. This week, there was a nice move on copper after the tremendous move higher and retest of the previous highs. And now we'll be watching what's happening the following week or the next week. So what we want to see, take a look, the previous level of resistance, it confirmed to be support because we bounced off it around 445, 447. So as long as we're holding here, there's always a possibility for a move higher. And for that, we'll be watching the previous spikes from which we made low. So if we are going higher, we're pretty much in a range now between 540, let's say 546 and 559. Okay, so we'll be ranging here. Some of you will find a way of scalping a little bit if you switch to a smaller time frame. And take a look on the hourly chart. You could see it nicely how this level could be broken and then we slid lower. And for now, after this move, we're not really rushing to the upside. And that's what 1, 2, 3, 4, 5, 6 hours. We couldn't really move much higher over here. So it could be that we're going to slide back to this level around 146, 147, retest it again, and could continue higher. So that on copper. And again, we'll be watching what's happening in China, which not much positive is happening there, as we know. They even, I think, the GDP numbers are lower and production is lower and so on. So that's as far as copper. Gold had a very interesting week. It was actually the first time in a while, over a month, I think, we went above 1800 on Friday, but we closed lower. So far, we are having a hard time breaking 1795. And this is the level of the reason I draw that level. Take a look. Resistance. We played. There was a support right here for a while. We broke through it, and then again, this level is a magnet that a lot of price action happening around it. So again, at least we have an idea what's next. We still need to break and close. See, even though we broke through 1800, but we closed below it. The close on Friday was 1792.75, almost 1793, and that brings us back to the tight range between 1764 and 1795, about $30 range, and let's see what happens. Also, again, for day traders, scalpers, people that looking to catch a quick wave, the ranges are good because you feel safer if you know where. For instance, if you were to buy back here at 1765, at least you know that you have some decent stops over here, and the low is 1760. So if you were to decide to buy at 1765, you would have a stop about $5 with a potential of, if you take half of the range, so $15. It gives you a nice ratio of 3-to-1. Potentially could be a good trade. Again, and on the other side, similar idea, even though the spike was kind of big, but the level is still a level. So 1795 to 1800, this is so far a resistance there. Let's take a quick look at palladium. It was in action here. So we said the previous week was a nice pickup here for the nice profit. Now it's not doing much. So I'm not sure what's the play will be the following week. And if we already in commodities, let's take a look at soft commodities really quick. Soybeans. Soybeans flat, weak, nothing much happening. Wheat has been strong, very strong week, and we are approaching the previous level of resistance, 1762. So we'll be watching 1762, 1763 for possible resistance. And take a look at so far, it's been holding a nice trend line over here. So that's another thing to watch. So far, it's been strong. Out of three of them, it's the strongest. Take a look. Soybeans is selling off. Corn is not doing much, and the wheat is pretty strong. So a few things. They kind of trade in the same group. There's some different fundamentals, of course, but in general, they trade as a group. So few things. We have 2 down, 1 up. So if you have a corn and soybeans are weak and the wheat is strong, so it could be that after facing resistance around these levels, as we said, between around 762, 763, if those two, the soybeans and the corn, remain weak, the wheat could have a potential of sliding lower. There would be a nice potential selling short trade over here. Or the opposite could happen. The wheat is continuing, which would be 1, 2, 3, 4, the 5th attempt to break it. We don't know what happened. Nobody will guess and try to make a prediction. But if the wheat breaks out of it, which also could be happening, then eventually maybe corn and soybeans will follow. But so far it's 2-to-1. So most likely scenario is that the wheat will slide from this level. So we'll be watching this week for 762, 763 as a potential resistance. So we finished with commodities. Let's move to currencies. We start with dollar index just to get general weather on the Forex market. So take a look what happened. Um, and I like to kind of dissect so you will understand how things really should be looked at. Again, there's not universal way of looking at it. I'm just sharing with you the way I look at things. So I like to see the big frame, what happening first. So monthly chart on the US dollar, the previous month was strong. Now we kind of on the monthly chart, we're pulling back a little bit, pulling down, and we are covering around the third of the previous month advance. So let's say 20, 30%. We are down from the previous month high. On the weekly chart, we had the move started from here. And again, take a look how levels works, right? Over here also we started here. We held a nice support on this level. And over here also there's some strong support action around 92.10. So the whole move started from here. We went 1, 2, 3, 4, 5 weeks up, and then 2 weeks down we went so far. Okay. Now also I want to mark this level here approximately, and take a look. This is the level from which we sold out. Just make it more clear or more accurate. Okay, and take a look. This now we're coming to the current price action. This is the week that we just finished. So we have a nice tail that stopped exactly on that level. The following day we didn't touch it, and the update that we had on Thursday confirmed that level again, let's say 93.45. And Friday was a down day, but we didn't touch that level. So 93.4, let's just see exactly what it is. High here was 93.455. Okay, so just 455. Okay, so this is the level that some traders would feel safe setting up a buy limit orders. Again, we're talking about dollar index, not just to trade the dollar index, just in general. We're looking at the strength of the dollar so we can operate on the basis with the pairs that have to do with the dollar. So basically, by looking at things at different time frames, we have established that 93.45 is a strong level that potentially could be a hard level to break to the downside. Therefore, dollar could be bouncing back to the high levels here, and we'll be playing accordingly. So let's take a look what it means for specific currencies. Okay, Australian dollars. We know there can be some decisions there. Let's take a look. We back to the level, and this is the level that we couldn't break, and we did, and we closed briefly. That was on Tuesday. We closed, and we had a strong day on Wednesday. On Thursday, we came back to the level, and on Friday, with all the actions up and down, we closed flat. So we'll be watching this level, 0.7464. If the dollar gets stronger and there's not a surprise interest rate increase from Australia, this could potentially mean this level would be broken to the downside and we start sliding lower over here. That's as far as Australian dollar. Let's take a look at USD CAD. As we know, there's some decision coming out of Canada as far as interest rate. Let's take a look what's happening here. And on daily chart, let's try to establish some levels here that make sense. And take a look. the move started from here, went lower. We played around the level, and then we bounced from it again, 123, let's say 123 level. And from here, we started a nice move higher. So from this level, we stayed clear for a while with a nice uptrend. As we start making higher highs and higher lows, then we came down to retest certain levels here, and then we made a new high, and then this level here became kind of a finish of the recent move higher, and from that we came straight where we started from. So level 123 is very, very strong. And again, unless there's a surprise interest rate from Canada and US dollar continues to be stronger the upcoming week, we could see a nice continuation over here. And if not, then we can come in. It's about 65, 70 pips. We can come in and retest this level again. And if that's the case, that some traders will be feeling safe to buy at 123, knowing that they could have a stop of 10, 15, 20 pips. We couldn't break this level in the recent move down. So that's an interesting scenario over here. We'll be watching it this upcoming week. And let's already take a look at the major pairs. As we said, the dollar might continue higher. Euro dollar is building a little bit of a strength since it broke out of 116, and it's holding his position here. So again, this level started around here so far, as you know. We couldn't break this level. So for euro dollar to start really some serious move higher, we need to establish a little bit of a strong support about 116.50, 116.60. So far, we're failing to do that, and that means that a level that was a support becomes a strong resistance, and that would eventually push euro to go and retest the previous lows. That would give us a nice opportunity to short and cover at the lower level. So we'll be watching this. Pound, let's take a look. There are a few attempts to break out of this level here around 136.30, 120, I'm sorry, 138.30, 138.40. We couldn't do it. And take a look, previously, as we couldn't break this level, we made a new low or recent low, and then it could repeat itself again. And take a look at 3 days in a row, we tried to really bombard this level here. We couldn't break, not even close. We couldn't even get a body of the candle above it. So it's very, very bearish here, and potentially it could cause the pound to go lower over here. So we'll be watching that. And New Zealand dollar, it did try. It had a very strong week. Take a look. The previous week was strong. The week just finished was also very strong. But take a look what happened in the daily chart. We made a very nice move higher, and the previous level of resistance from which we slid down, we broke through it. We closed higher, but the following day, which was Thursday, we closed right back below it, and Friday was a down day. That means that 170, 170 level is holding on the subject of resistance. So potentially this could start to move to correction to the downside on New Zealand dollar. And let's take a look already on the Swiss franc. Similar idea. We're coming to the level of support, 91.40, 91.50. It's been selling, and it's coming to retest this level. We'll be watching it again. And let's take a look at USD ZAR. USD ZAR had a move up. This was the up week. And what could potentially happen this week? Let's take a look. So first thing comes to my mind, I want to draw this level over here. Why? Because on the retest in this level, this is what the whole series move down happened. So from 1508 with a little bit of corrections, we went down to 1338, and we start. I'm going to mark this level just for visual, and from here we start recovering, and then we broke the level from which we started 1508. We traded a couple of days above it, and then we came straight back in, and from here the new wave up happened. And take a look how levels really repeat itself. A lot of action, and from here on the failed attempt to break lower, there was a nice wave higher. So what happens here on the up? We're in the uptrend now after the correction, and there's a possibility that we're going to retest 1508. If dollar continues to be strong, nothing crazy positive coming out of South Africa, unfortunately. And there is a possibility that we'll go retest 1508. And if you look at the weekly chart, it looks much better, right? Now here, if we do break 1508, 1540 is the next level. And if we break through this, I'm just going to change the color so it'll be a little bit more visual here. Okay, and if we do break this level here, 1541, it just opens the whole space for very, very nice move higher. And that is also a possibility. So again, take a look at how difference, it makes a huge difference when you zoom out. On the daily chart, okay, you look at the daily chart, it's fine. But when you zoom out and you see the whole new field opening up for the instrument. So we'll be watching on a potential move higher on USD ZAR. Okay, let's move now. We're going to move to indices. And I'm going to start with the one they always make fun of, nothing personal, but it's been super strong, was the strongest one, Nifty 50. And this is the first week in a way that after a strong move higher, we're selling off. And on the daily chart, you can see how we really start rounding up to the downside. 1, 2, 3, 4 days straight down. And what could be next? It's very simple. We need to retest this level here. I'm just going to change it back. Okay. We did try, we didn't quite touch the level at 18,010. So there's a possibility that we find some support here and continue higher. And there's also a possibility that the uptrend is finishing and we could see a change of trend to the downside. But for that, we would need to really see some price action, some closing on the daily chart below it, and that would mean continuation to the downside. And potentially, if that happened, this level around here would be probably the next level of support. There was a lot of action, a lot of build up over here. So 17,330, let's say, this could be a potential move. I mean, potential take profit if we start sliding lower and with a more intense moves to the downside. So we'll be watching that. Nikkei had a very, very strong move down on Thursday. It was a very beautiful move. On the weekly chart, if you could see, it's been struggling in a way. When I say struggling, that means it couldn't break through the previous level of resistance, and we'll take a look what it means. Let's take a look from here. I'm not counting this spike, but from here we couldn't break with the triple top, and then we went lower, and 1, 2, 3, 4 weeks down. Then this week, the week of the 10th of October, we had an up week, and then we're on the way down again. So scenario, we probably want to draw this level over here. As you saw, this similar ideas, we had the multiple attempts to break to the upside. Similar thing was to the downside. It was a resistance became support, so we confirmed support. We almost confirmed support, and one, two, three failed attempts to break through support. So if the markets in general going lower, so we probably potentially could move as low as 26,951 to the previous level from which we bounce, which would give us a very nice profitable trade over here. And if we should choose to go higher, this resistance should be hard to break. Again, when I say should be, it's in general, nothing is in stone, anything could happen. So that's as far as Nikkei. Nasdaq had a strong week, 2 strong weeks in a row. We couldn't break the upside because some Nasdaq stocks, we'll talk about them, sold out. That include Facebook, Amazon, and S&P 500. We for a moment we touch all-time highs. The same thing we did on Dow Jones, but we closed lower. So this week, let's take S&P as a general thing. Take a look. Again, I said sometimes that every change of the trend is precedes by new highs, and we did have a new high on Friday. But take a look. Try to make it bigger. Well, I'll change it to the bar for a moment so you could see it. Okay, this is the bar of Friday. Let's take a look. We broke the high 45.51 and a quarter. Okay, this is all-time high on S&Ps, but take a look. Open and close is the same. Open was 45.29 and a half, and close was 45.21.75. With all these crazy moves and new all-time high, we ended up closing a quarter of a dollar higher. What does it tell us? That all this action, again, just my speculation, don't take it for granted, but it says that it got all the stops, the buyers didn't buy it, it didn't create any short squeeze at all. We came right back in where we came from. So potentially with all the chaos and the supply chain issues and everything else, we could see a beginning of a sell-off again. It's kind of redundant in a way because lately every sell-off, when we say, okay, this is a sell-off, they just buy things again. This could be another case of it, of course, but there is also a chance that we will see a beginning of I don't know what to call it, crashing in the market, because there's a lot of reasons for it. We have a lot of chaos. We have still COVID not under control. We have supply chain issues, a few other things that I just read something about the malls. The shopping malls are underwater. They're really suffering since the COVID, and they're highly leveraged and they owe a lot of money. So if that thing doesn't improve, you just have potential chaos on mall owners not being able to pay the debt off and so on. And of course, the Chinese companies that are growing a lot of concern on the real estate and so on. And let's see, it's going to be a very interesting week with some interest rate decisions. And let's continue with FTSE. FTSE is trying to get out of this range over here. The previous week was strong. This week that we just ended, also pretty much flat week. Take a look on the daily chart. Friday was a strong day, but let's see what happens. Again, potentially if there's interest rate decision to the upside, it could affect FTSE negatively, and we'll be watching it. DAX also flat. Not only flat, it closed lower the week, so potentially we could start pulling in. Let's take a look. Here's the level on DAX. That's the level where we stopped, and we play around it. Established support, went higher, went right below it, a little bit above, and we're sitting. We kind of hooked to that level, 15,531, 532. So if we start seeing some price action to the downside, this could be also a beginning to the sell-off on DAX. CAC 40, similar idea. Okay, so pretty much the whole mood of the indices. We'll be watching any kind of announcements. And as I said, let's take a look again. I'll repeat it. We had a fake breakout on the all-time high on S&Ps, and we closed the day flat. So, and this was a vertical recovery. Take a look. It took time to get this level with a little bit of attempts to go higher, but take a look at how we really recovered. It was a vertical recovery and a fake breakout. Now we could see probably our kind of a gravity taking over and continue to the downside. So potential sell-off coming out, and we'll take a look something that supports it on the individual stocks. So we'll move to individual stocks and we'll finish it. And at the end, I'll just touch base a little bit on cryptos. So Apple had a up week in general, but we are still failing to reach 150 here. They announced new products, new MacBook, and so on. Investors got excited a little bit, but we still couldn't reach 150. That was a key level there. Amazon had a strong sell-off on Friday. And in the opposite direction, Walmart had a super, super, super duper recovery. Remember we spoke about it. Just to refresh everybody's memory, and for new people, I'll just repeat it. What happened in Walmart? Amazon at some point announced they opening physical location, retail locations, and on that news, Amazon went up and Walmart sold out. And take a look, it was a strong sell-off pretty much. We came from 150 level all the way to 135 and 1-2. You have a triple bottom, and we said around here around 135, 136, it could be a nice recovery. And then one of the pension funds, don't remember the name of it, they managed about 30 billion. They decided to buy Walmart and they announced it, and that also gave a little bit of a boost of it. And some other investors jumped at it, and take a look at how beautiful recovery was, and take a look at this gap and go. So we reached pretty much fast. We reached on Walmart these levels, right? The level from which we sold out, 49 and a half, 149 and a half, and we failed to go higher. So potentially we could see a little bit of a correction or a pullback before the continuation higher, or the investor might think, okay, there's a nice move. We took some profits. Amazon is still building retail, and let's take a profit and wait for the pullback, and that would actually cause the Walmart to go higher. So we'll be watching both of them. Amazon actually is approaching the support around 33.20, and the Walmart is the opposite. It's a kind of a mirror image, 150 resistance. Okay, Facebook. Facebook was trading around 324. We know the issues with the insider sharing details and other things, and we held 325. Then we, with some gaps, went higher as far as 343, and then there was a gap down over here, and we're back to 325. The thing is, Apple is reporting. Sorry, Facebook is reporting this week. For the same matter, Apple also also reporting. We'll get to it. So Facebook is reporting on the 25th of October after market. So let's see how the earnings will really affect the stock. It could continue sliding, and the whole move started. Let's see. This recent move started from 255. So potentially, if we go lower, of course, we would have a little bit of a resistance at 305 at 300 psychological level. But if we start sliding really heavily, we could come to the 255 level, which was a strong, super strong support that caused the move high over here. And we mentioned Apple on the 28th. Apple is reporting also after market. And let's see, like we said, it has a hard time breaking 150. JP Morgan, switching to banks. JP Morgan is going crazy. It's all-time highs, and we closed at the all-time highs. So let's see what happened this week. For some reason, the stock is very, very strong. The strongest out of most of the banks. And let's take a look. Citi. Citi is not really doing much in sympathy with it. And I just wanted to take a look at Goldman Sachs. Goldman Sachs also strong, but not very close to the all-time highs. So let's see what happens. If Goldman decides to follow JP Morgan, the 417, 418 area would be a resistance. We're getting close to it. And if not, it will go down and retest the previous levels of support around 379, 380 area. And Tesla, of course, Tesla is the champion, all-time highs. And interesting how few analysts are kind of putting their inputs there as far as Tesla, and they say that Elon Musk will be the first trillionaire and so on. A lot of excitement around Tesla. And also they say that the main success to Elon Musk might bring the space program, not the cars. Even though the cars are doing great, and as far as the cars, uh, they expect to deliver 1.3 million units in 2022, and for this year they about 890,000. So it's a huge growth there. A lot of excitement. As I said the previous week, one of the analysts, they set up a price so 950, and now they raising the estimate to 1,000, 1,000 plus, and so on. So Tesla is on fire. It's on the way to the space, if I can use that allegory. Okay, so that's as far as stocks and other instruments. And let's take a look at Bitcoin. And Bitcoin is actually, after confirming the highs, breaking actually through the all-time highs so far, we went lower. And again, just to remind you, I mentioned in the last week webinar on Tuesday, instrument by the name BITO, the ETF on Bitcoin futures started to trade. And the first day was very successful, opened at 40. It went to about 42, then back to close to 40, closed about 41.78. And it started to trade a lot of volume and so on. And a lot of analysts actually had the input, and they were saying that it's good for Bitcoin that the futures are starting to trade as the ETF, but also it can cause the outflow of money for the day traders. Because if you're an investor, if you hold real Bitcoin, or how real it is in electronic form, you're not really a scalper or day trader. You invested and you're holding it. But a lot of traders involved in the price action of the Bitcoin are the day traders and scalpers and so on. So there's also a chance that a lot of them either starting or thinking about switching the action to just day trading the ETFs itself. It's cheaper, around $40 and so on. So maybe the first was the excitement of it, and it helped Bitcoin reach the all-time highs. But at the same time, it's been selling off in the past couple of days, and it's trading a little bit below $61 currently, 61,000 currently. And let's see how the second week after the debut of this instrument will affect the Bitcoin itself. And Ethereum is actually holding up. Also, we confirmed the all-time high we pulled in, and now we're on the way, possibly confirming it. Again, just to summarize, what we spoke about, there's still a lot of negative aspects that are pushing the markets lower, and the biggest ones that's the supply chain issue that affects all the industries pretty much. And that combined with the expensive oil and so on. And of course, we have on the agenda, the earnings are still coming. Some of them are mixed so far, a lot of good earnings from the individual companies. And this week, as we mentioned on the economic calendar, we had some announcements from Canada, Japan, Australia, as far as also European Union itself. As far as the interest rate decision, press conferences, monetary policies, a lot of announcements, and we'll be watching it, and we'll be watching the instruments that we went through. And we can't predict anything. We can't be certain of anything in these market conditions. But the good thing that we have a plan, and if we combine that plan with strict money management and risk management, we really have control over our losses. And this is the main important thing, because we can learn a lot of things, as I always say, but if we do manage to control our losses and we have a nice plan, that would be great if it worked also. But if it doesn't, it's also good. We prepare for that by setting up criteria on the risk management. I wish everyone an amazing week, and be safe, stay healthy and happy, and lots of success. All the best.